Hey guys, hope everyone is well. Looking forward to today's live stream. The main focus today is to talk about the geopolitics that's going on in the world right now, and then we'll switch and we'll go more crypto heavy near the end. So look, war kicked off end of February. Bitcoin is up from there. Wasn't down to rate cuts, no liquidity expansion, literally during a war while everything else got blasted. So it did tremendous. I saw a study that said that one of the first times ever Bitcoin outperformed pretty much everything else during this type of environment, which is very impressive. And obviously today we're in a tricky spot as far as where the market's at. But in one word, Mr. Abror, how do you view this market right now? Give us one word.
Um, Cautious. Um,
Okay, that's one word. Great. Tom, give us
Choppy.
one word. Choppy? Okay, cool. Fair enough.
Tricky, like as if like okay, let me give you one sentence. I'm not buying into this. That's what I would say.
Yeah, that makes sense. Fantastic. And look, let's dive into where we're at right now and go from there. So yesterday, we saw the ceasefire talks, ceasefire implemented, less, everything pulled back. Well, dollar went down, equities rallied, Bitcoin up, bond yields moved as well. And yeah, it seemed like, okay, here we go. Some positive momentum. Now, I think all of us kind of had in mind that there were a few different directions it could go. But Tom, you published a report on this yesterday, and you said there were three possibilities. Can you remind everyone what those possibilities were that you mentioned in the pulse?
So I basically broke it down into the ceasefire holds and the deal is done. That's one. Ceasefire doesn't hold and war escalates, or the ceasefire. The ceasefire holds and the deal is done, or the ceasefire doesn't hold and war escalates, or the ceasefire holds and the deal isn't reached during the 2 weeks. So I think there was worries yesterday about whether this could escalate before so the ceasefire doesn't hold. So is the ceasefire going to be broken? And it looks like it was broken, but everyone sort of I think that was sort of independent groups within the IRGC that was still launching. Wasn't there was questions about is Lebanon involved in the ceasefire? Not, are they in the ceasefire? Are they not, etc. So I think that's being like ironed back out today. I think you have to say now the ceasefire should hold for the next week or two. I think you'll get ideas going into this Saturday morning local time, Pakistani time, as to whether there is room for a deal to be done here. My sort of personal view is that I think Trump is going to make big concessions on all this. It's very possible that he's using the 2 weeks to get more military personnel, etc., into the region. And he's going to escalate again after the 2 weeks, and he's using the 2 weeks as time to get personnel, military equipment, etc., over into the region. But I think he sort of realised what's actually like here for him in the US to keep going at Iran here for. I think he just needs to get the Strait open. I'm of the view that he's going to make big concessions but still do a deal. I think that's where it's going to go, and I think you get a rally in risk assets. I think it's choppy. It's like stair steps as we get these, as there's all the posturing that's going on, and everyone then goes, "Oh, maybe this deal isn't going to be done," etc. And then the market will bounce back up from there when the deal is like back on the table. I think you get that for the next 10 days or so. But I think in 10 days or so, like upon the news of a ceasefire being done, give it a few, on the news of a deal being done post ceasefire, I think you give it 3 to 10 days and then you start shorting those local highs.
Okay, interesting. Yeah, the market is definitely reacting very quick to what comes out. Like we saw straight away, oil dropped, Bitcoin and equities up, dollar index as well down. But then, yeah, look, you said it's controversial, and maybe rogue groups in the IRGC didn't really catch on because they're so decentralized about this type of ceasefire. However, from my perspective, it seems quite clear that the Israel strikes on Lebanon were a clear violation of the ceasefire. And Pakistani representatives who were pretty much negotiating the deals, they've come out and said, look, like, we really hope you guys Like, come on, respect the rules here. Israel was saying, hey, we weren't overly part of the negotiations here, and we don't believe it counts. So I'm less concerned with the IRGC maybe now circling back and saying, oh, sorry, guys, we went away yesterday, that a ceasefire was reached. It's more a matter of, will Israel respect those boundaries and what happens from there? So what do you guys think, for both of you? Do you think the ceasefire was broken? And if it was, what's the likelihood it's broken again? Because I see oil has already pushed back up, and I don't believe the strait has properly opened up despite the ceasefire.
Who's gonna start me? I think in I think for both sides, I think they're considering the ceasefire not yet being broken, because otherwise the deal or whatever the deal they have for the next like 2 weeks, it wouldn't hold. So far it's still holding. So I think neither sides consider ceasefire to be broken yet. So that's my like overall view. I think market views it the same way. So like the way I see it, BTC is still trying to push higher. So I think also market believes that the ceasefire hasn't been broken yet.
What do you think, Tom?
I think that I think it's like debatable, but I think it probably was. But they're just going to get everyone back in line again. I think the one thing is the strait, and I don't think the strait is open. Apparently, only 4 ships passed through yesterday, so I don't know. I think that's going to be the real like point of contention. I think the nuclear material, I think the ships passing through the strait are going to be the. I think Trump is coming under a lot of pressure now from oil executives saying, you know, we're not paying these rates that's being demanded. You need to do something about this. And also, there's other straits in the world. I was reading it today. I can't remember what they're called. So I probably shouldn't have brought that up because it sounds silly now. But there was 2 other key straits or waterways in the world where those local countries could go and block those and say, well, the Iranians are doing it. Why can't we go and do it? It's a huge revenue stream for us. And then all of a sudden, you just have generally much higher shipping rates in the world. So I think Trump has to set a precedent here to get that strait back open. And at the moment, the Iranians are really stamping down on this. And I think they know where they're strong, and I think this is the concession they shouldn't make and don't need to make. But I think that's the problem for markets is this continued closing of the strait. I mean, the Americans were reporting yesterday that ships and vessels are starting to pass through, and that they weren't. Only 4 passed through apparently. So I think that sort of says it all at this moment in time.
Yeah, it's tricky. And that's where, the market seems to be reacting more off of the headlines and actually what's happening. The issue is right now we're seeing a lot of headlines. It's been a shit show, hasn't it, the last month or so? It's been crazy. I guess from my perspective, the strait hasn't been open. Ultimately, even if it's opened, but there are tolls being paid, that's not the same. It's worse than it was before, right? So that's not great. I do agree with you, and we spoke about it last week, that a win now for Trump is more kind of, just get the strait open properly, right? I don't think he needs anything else. He's going to run off this as a win. One, I guess, semi-positive that I can perhaps bring to the table here is, if I'm correct, the Iranians are looking to be paid in Bitcoin or in crypto. Is that correct? I've seen some stuff in the Financial Times, for CoinDesk. I don't think they want dollar. It's probably going to be rubles or won or some sort of crypto. What's your take on this? Is that just a rumor mill? Is it true? Because heck, if they do keep the strait semi-closed and they keep collecting a toll, that's a lot of capital flowing into Bitcoin potentially over the next however long this will last. What's your take, Abror? You're smiling.
Yeah, I think that's true. That's what they did, what they said. But I think they haven't studied Bitcoin enough because they said they want to be paid in Bitcoin because they don't want to be tracked. But if you go to official Bitcoin account on Twitter, it's written like trackable cryptocurrency in the description. So Bitcoin can easily be tracked. And it's very slow for payments. So I think they didn't really study before announcing it. But yeah, that's true. And it was a bit laughable. And I even like posted, we all need adoption, and the adoption looks like this. Iranians asking to be paid in Bitcoin.
Yeah,
Uh,
it's interesting though, because obviously they're off base with it not being trackable, but that's words. Like ultimately, I think the perspective we can't be stopped, right? So it's not the same as being in a different currency, and perhaps there's a different crypto token. Maybe your Monero is going to start pumping abroad. Who knows what they'll accept? But Tom, like realistically, if they do manage to implement this toll and maintain it, I've seen some. I think they're jokes. I think he's trolling. Trump saying, "Hey, he can also take a piece of the pie."
Yeah.
And start taking. I don't know what he's like. So how much can this amount to? Like, how much oil would pass through the strait? And I've seen some rumors about $1 for every
Yeah.
barrel that goes through. How much capital are we talking if they truly were to implement this toll and be collecting in Bitcoin? How much are we talking here?
I think the numbers are like 20 mil a day, but it's so it's like it's meaningful, but it depends on how much they charge. There was some report saying that it could be worth up to like 80 billion a year to the Iranians, but I think it's all rubbish, to be honest. I think the oil executives are saying like this is laughable, we're not paying this. I think Trump saying it might be a joint US Iranian venture. I think that's complete rubbish as well. I think there's so much crap going out in the headlines at the minute from Trump is like a money. I think he's a money person, and he just cares about like if he's getting a backdoor kick his way and stuff. Honestly, I think it's like that. I think they'll do whatever they can to get the strait opened. I don't think there will be a toll, or if there is a toll, it will be there temporarily, and Trump will declare that as that's how they're going to earn the sort of war reparations to get money back, and it's going to last for 8 weeks. That's then going to amount to this amount of money, blah blah blah, and the world will just move on. Yeah, I'm not convinced by that story, to be honest.
Oh, okay, interesting. I don't know why they would open up the strait without taking a toll. It seems like their only real weapon. So I don't know why they would ever do that. And I think the obvious looming threat of they could close it up at any time. It's not overly difficult. I think that will always sustain. I think you also said there's a backlog anyway. So because the strait has been closed for a while, oil prices maybe they're moving crazy off headlines, but there is already a bit of a delay. Like there is less supply than they should be, right? So that's not ideal. Oil surge back to 100. Is that simply off the headlines, or is that because no ships are moving through? And is it practical? Yesterday we said oil's down. This is a good sign. Long term, great for inflation, but it's gone past 100 again. And where are we likely to go during this ceasefire if they don't open things up properly?
I think that was just a trade. I think that was just oil moving down on the headlines that the Strait would open. 4 ships went through yesterday. The Iranians are saying they'll now during the ceasefire they'll only allow 15 ships to go through a day. Bear in mind, there's 800 sat there waiting. The Strait is not open. Whatever you want to say as they're charging this toll, it's not being paid. Whatever you want to pitch it as at this moment in time, it's not open. And I think the market sold off yesterday. Oil sold off yesterday on those headlines, but then as the day played out, only 4 ships went through. Today, the news broke that in the morning that only 15 ships a day are going to be let through by the IRGC. Everyone's now just starting to realise, okay, this thing actually isn't open, and then oil gets bid back up. That's why I sort of posted that oil long yesterday. But I think now the Israelis are potentially involved with a potential ceasefire with Lebanon. I think now maybe there is this like room. Okay, there is a deal going to be done, and oil might just sort of hang around the 100 area, like 95, 100 area for a while. But yeah, that's where I don't see oil crashing from here. Put it this way, I think its only direction is to stay elevated or move slightly higher.
Okay, interesting. So I guess if you had to long or short, so you would say long if you had to.
Yes, so I was long. I was long. Yes, I'm still in it now, but I think on the news 2 hours ago, it's like down. It's profit wise, it's pulled back a little bit, but it's still up on the position overall. I thought it was a long yesterday because it sold off massively, and the Strait was never going to open straight away anyway. And to be honest, it's opened even less than what people would have expected. To open by 4 ships yesterday, maybe 15 ships a day now, with 800 sat there as a backlog. that's basically closed, isn't it? So I wouldn't be surprised to see oil get back to 110, 120, really. I wouldn't be shorting it here, put it that way.
Interesting. Yeah. I feel if we start to see these numbers 110, 120, it will just trigger Trump's emotional side again. And he's going to start the crazy rhetoric. And if that happens during the ceasefire, as soon as people start pressuring him and calling him an idiot, oh, oil's at 110, you did nothing. I think you're going to see some crazy Truth Social posts. But what about you, Abror? If you were to short or long here, what would you do? You said you're cautiously bullish at the start.
Yeah, on the market, not on the crypto market, not on oil.
Yeah. Yeah, what's that, Sean?
I think on Hyperliquid, Brent oil is like massively shorted, 400% in funding, like negative
Yeah.
funding. So I don't know whether I should consider it as a signal, but I would definitely not long here because I don't know. I don't wanna. There was so much insider trading last couple of months with all this geopolitics that I don't wanna. I don't have an edge here, so I would just watch from sidelines. Yeah,
Yeah.
agree. Like on Strait isn't open and market might be overreacting and oil goes higher, but I see the funding is like super negative. And I have a natural question: who is shorting it? Do they know something I don't know? So I would just stay away from it, to be honest, at this moment.
Yeah, that makes sense. Yeah, no, very interesting. Very interesting. I had one other question, but it's skimmed past me, so I guess we'll move forward. Tom, let's zoom out from the geopolitics and maybe touch on macro for a little bit. Continuously, we've spoken about how financial conditions are tightening. This is just a reality. We've also seen, inflation doesn't look good. Job market did come in, surprising actually, which was positive, I guess. But yeah, if you could summarize the current macro backdrop, that'd be great. Describe current macro conditions in 60 seconds.
Okay, I'll probably keep it shorter than that. At the moment, the Fed have two mandates: a stable prices and a stable labour market. They're going to focus on the stable prices element because prices are not going to be stable because oil is up significantly. So inflation is going to be up significantly. So you're going to see hot inflation prints over the coming months. That's going to keep the Fed on hold. Although keep the Fed staying on hold for Q2 and maybe into Q3 is going to probably mean that economic growth comes down. So that's likely going to lead to 1 to 2 cuts towards the end of this year. I think you get consecutive cuts, 4 to 5 consecutive cuts. I think they start in Q4 of this year. I think you probably only get one this year, but you might get two. That's from that point of view. Bond yields have been going higher and the dollar has been going higher. So that means financial conditions have tightened. This is not good for risk assets. So that is what has pressured equities, pressured crypto, etc. And crypto has held up relatively well underneath all of this. But ultimately, if you get a resolution to this war, you're probably still going to see bond yields remain elevated and the dollar will roll over a little bit. But ultimately, the financial conditions are going to stay tight or still somewhat tight. And that's going to pressurize risk assets. So you might get a relief rally based on positioning and new optimism because the war has de-escalated, it's all good, back to normal, blah, blah, blah. But then I think you see these local price highs and prices roll over because ultimately bond yields are higher, financial conditions are tight, the Fed is not going to cut anytime soon, at least probably not for 5 to 6 months. Walsh won't be able to do much because it's a voting committee, so he's just one man. So ultimately, I think risk assets make a local peak beyond this deal. Let's say a deal gets done beyond this deal, and then they roll over.
Okay, interesting. So you paint a very clear picture of liquidity tightening, and that does seem to be the case undeniably with the US. And I know me and you spoke recently about like the M2 and global liquidity, and I know you put a lot more emphasis on what's going on in the US. But from some reading today, and I could be incorrect, the People's Bank of China is aggressively injecting global M2s up on the last quarter, and Bitcoin's doing well ultimately, right? Bitcoin is doing well. It held up phenomenally despite the crappy conditions and the war. Are we in a spot where Bitcoin's actually responding more to global liquidity over just US liquidity? And I did see something from Binance saying there's actually a bit of a correlation that they're seeing, Binance research, between Bitcoin and global monetary policy, but it actually flipped too. It wasn't just, Bitcoin being, what's the word, like a following indicator. It was a leading indicator.
Leading. Yeah,
Yeah. Talk to us about that.
it's always been a leading indicator, to be honest. Like it always moves first. It tops before equities, it bottoms before equities. It's always been a leading indicator. The Chinese have been putting in significant fiscal stimulus for quarters now, like 3-4 quarters, I think it is. So that's not recent. And that hasn't really affected the price that hasn't helped Bitcoin go up because liquidity conditions and financial conditions in the US have tightened, and that still is the case. So I don't think that's not a phenomenon that's changed or a new phenomenon. That's the status quo is still the same there. So I don't think that drives Bitcoin higher in the near term. The unwinding of geopolitical risk is what will drive Bitcoin higher in the near term, possibly. But I'm not hugely confident on it that I'm betting on it with major spot size or anything like this. What's the other thing? M2, for instance, M2 is a very general gauge. Like it's a very general measure. It's not measuring it's not measuring the liquidity in the financial markets as well. So M2 will always generally go up, but it's the pace at which it's going up. If it's at a declining
acceleration rate.
Yeah, if it's at a declining rate, that's no good. So, it's I don't really know what more to say other than the PBOC have been injecting for ages or trying to put fiscal stimulus into the markets for ages, because they've had a faltering housing market for years and years and years. But the key one is the US, and the US is financial conditions have tightened, and liquidity is financial markets liquidity is tightening because you've seen a move from liquidity over the last year, 18 months. You've seen a move from the surplus liquidity in financial markets that's now making a transition as debt is being refinanced into the real economy. But that's bad for financial markets. You can have a good financial markets and a bad economy. Then you can also have bad financial markets and a good economy. And I think we're moving more towards the better economy with the worst financial markets, although I think we're already in that point. And I now think in the next 9 months, you see the economy start to roll over as well. And as you see the economy start to roll over, then you have to step back. The Fed will have to step back in and inject liquidity back into financial markets because there's no really way else of doing it unless they give out checks like they did in COVID to people. But they would have to stimulate by putting liquidity back into the financial markets to start a new cycle. So I think that's what we get by year end.
Okay, that makes sense. I want to stress test your thesis as a whole. Before I do, Abror, do you have any comments regarding this? What's your take on it? Do you agree with Tom wholeheartedly, or do you see things a bit differently from a fundamentals point of view?
From the fundamental point of
Well,
view.
any point of view. You're the head of research, Tom's head of analysis, so.
Yeah. I mean, one of the things is that, it could be that the market has already priced in much of the stuff. BTC is down 50% from the highs, and and it's held up well in general, and it's getting adopted. Like Morgan Stanley has launched an ETF recently, and they were like a big opponents of crypto in the past. Was it like Morgan Stanley or some other big bank? I think it was Morgan Stanley.
JP Morgan.
And the second thing is that, like, I have a question, like, does the Fed, for example, you laid out your thesis on why economy will be very bad in like 3, 4, I don't know, 6 months. Like, don't they already see that happening and take precautions against that?
No, I don't think they see that happening yet. I think they see that as happening sometime towards the end of the year, and they'll then take the precaution there. So I think, like economic growth today came in. I think it was really weak. It was like 0.8. I need to check it again, but I think it was like 0.8% or something, and that was for Q4 of last year. Hang on, sorry.
Yeah, I mean, my only concern is that sometimes the market is always forward looking, and when it becomes clear, market already will start pricing that in even before they actually start helping the real economy. So
Yeah,
again, I'm not super bullish here. I'm not saying like we
no, I
should
get
flip
you.
positions. Yeah.
I don't think the point you're talking about, I think that point is not here. I think that point is in 6 months' time. Like GDP today, it came in last quarter, Q3 last year came in at 4.4%. We've just had the reading for Q4 of last year. And Q3 was 4.4%. Q4 of last year was 0.5%. Like it's a drastic move down. The Fed can't get in front of it now. So even if you start to see this weakness, and we're starting to see it, you see it in the job market. Jobs, like the payroll numbers are big, and then they're really big to the downside as well. But if you look at the average, it's plus 16K per month, but that's well below the break-even rate. You see things like job quits be at lows. It's not a confident job market if people are not willing to quit their job, move to a new job because they don't feel confident that they can get the same salary or an increased salary in a new job. So you're seeing all those kind of metrics that show like an underlying weakness, but you haven't seen them like the general metrics fall off a cliff yet. And I think as we start moving into this next sort of 3 to 9 months, by year end, I think you start to see that transition more into not falling off a cliff, but deteriorating more meaningfully. And then that's when the Fed will start to step in. But even at this moment in time, if we was to see that in Q2, the Fed can't step in really in Q2 because they're going to be seeing prints of 3.5, 4, 4.3, etc. percent inflations. So because of these higher oil prices, what they can do is they can choose to look through the higher inflation and put it down to a supply shock. It's transitory, etc. We can choose to look through this because the labour market is weakening. They'll be concerned about the GDP print today for sure. But so they can look at all that stuff and get in front of it, but they're not going to get in front of it if the price of oil is still high. I think this is what, again, is also pressuring Trump to get a deal done here. And he's already made big concessions, in terms of the potential strait being closed, etc. Saying, oh, they can charge a toll, but we want 50-50 of it. That's just ridiculous. But anyway, I think the point you're talking about is right. I just don't think it's now. I think it's in 6 months' time. And sorry, one more point. I was on the phone to a friend yesterday, and we were saying like, when everyone's fearful, that's usually the time to buy in. And I was like, yeah, no, I agree, because he was trying to convince me of like, should we be bullish? Should we be blah blah? And I said to him, in all bear markets, there has been a point in time before the new bull where you're at the end of the bear and it's like screamingly obvious to buy in because you've had months and months and months of basing out, and then you just know it's going to start going higher. Just nothing else can really send it too much lower. I really felt that in 2018, and I really felt that in 2022, towards the end of 2022. I think now this is just not that. And so I think you can maybe play for like a rally or relief rally now. But I think in terms of that general feeling of like, Christ, we've had a year, 12 months, 15 months, 18 months, whatever it is, of that real suppression to the downside. And you see prices like base out where you're in deep value territory. Deep value is between 49 and like 62. And we sort of just touched it. But you usually see a hammering out in that area. We haven't really seen a hammering out in that area. And I know there's the argument of, okay, we got sort of diminishing returns to the upside, so maybe there's like diminishing returns to the downside as well. I get all that as well. So I can easily be wrong here, but just want to look at the state of things. I really feel back in 2018, there was that point in time where it's like, this bear market is done now. This is definitely going up from here. Why don't I have more money than what I've currently got to go and buy more of this stuff? And at the end of 2022, I felt the exact same, like, oh, I only have this amount. Why don't I have more to go and buy in? And it was just so screamingly obvious. And I think now we're just knowing we're just not at that point yet as well. So it was almost like, and those bottoming patterns take ages. I don't think this has taken ages. Like we're like 2 months. These things usually take 6 months, like minimum. I don't know. I don't know. I'm not convinced.
That makes sense. I do want to push back a little bit. I think it'd be a great exercise. I know me and Abror, we had more bullish conversations too, so we'll do the same afterwards. Kind of go bear case, bull case. You talk quite a lot about the bear case now, but I want to go into a bit more detail of that bear case because we're at 70K. We touched 62 or 60, whatever we went to, and you're right, we're up. However, you're not saying we're just going down. you're saying we're going 50 to 60. You know, if you said, oh, like we pull back to 62, 63, okay, like we were there recently. But you're saying we're going potentially to the low 50s. Now, you're right. You've seen this stuff in the past, and you've got it right pretty much every time. And you're right that extreme, ridiculous pain where the value zones just are no brainers. You spoke about the cost basis levels, they should be hit. And if they weren't, that would signal some sort of regime shift, pardon the pun. But, you know, these cycles were, they were liquidity based, you know, they were, you know, they were rate cuts, expansions, etc. This is, I don't know, Bitcoin surprised me. I think the resilience it showed under these tightening conditions with the war, do you not feel this is a shift? Is this not just a change? This is not other cycles. So that feeling you're saying you felt under other cycles, this is not the same thing. Could you have possibly imagined that Bitcoin would hold up the way it has during a war like this?
No, I think it's held up all right. I do think it's held up all right. But then there is just
Is it
massive
not
hedging.
up since the first day?
Yeah, it is. It's one of the best performing assets since the war started. Like for sure. I'm not denying that. I think if you go away now, would drop every single opinion you've got and you write down all the bullish arguments and all the bearish arguments, I think the arguments for further downside in the coming 3 to 6 months is massive against what upside. Like, let me ask you guys now, what upside arguments are there when you look at like the liquidity picture, the Fed, what's happening underneath the surface in crypto? You know, Bitcoin's not getting the narrative. Gold has got the narrative, and that's not me saying I'd buy gold at this level, but it just when you look at all the prior bear markets, there needs to be 9 to 18 months of pain for then people to say this is so suppressed now, this isn't going lower anymore. And you've seen a range for 60 days. That's all it is, 60 days.
Yeah.
It's nothing more than that. So I think if we stay in this range for another 120 days, cool, I'll turn bullish because I'll say, you know what, it's had its chances. You're in a range. 60 days is just a range. That's all it is. I don't think that's like relative strength as bad as that sounds. I think 60 days is not enough to sit there and go, yeah, relative strength.
Okay, you know, like I was going to split that into two sections, but I'll respond to your question. We'll kind of combine the bull and the bear. So I think narrative-wise, the way it did hold up under this war, I think that's something phenomenal people can run with. It's real-world use case as well. I know people who are in Dubai and they were using crypto. I'm not saying Bitcoin as a whole, but they were using crypto over the last, 2 months while they were bouncing between countries.
Yeah.
Right? I think you saw how useful.
Me too.
Yes, look at you.
Yeah.
So I think Bitcoin performing so well under this pressure, outperform gold, everything. That idea about hedge against chaos. Hey man, it did. I think that's a great narrative. I think the idea of the use case for DeFi, I know we're going to talk about crazy hack later, but the use case of DeFi and what went down with Hyperliquid and how well that thing performed. I was talking to a guy today who was trying to argue that AVAX was withholding. I'm like, mate, it's down 4% on the month, whereas Hyperliquid's up 20%. I think the use case of DeFi was really shown. I think the use case of Bitcoin was really shown. I think that prediction markets, which are built on crypto basically, I think they have become even more mainstream and they're not disappearing anywhere. I believe it was Morgan Stanley just launched a Bitcoin ETF. I think if the whole quantum threat thing, I know you're going to mention in a couple of minutes, is as bad as people are saying, I don't think these mega funds would actively still continue to launch an ETF over and over. I think it's UBS, like a Swiss bank worth like $6 trillion, is now testing a Swiss franc stablecoin. The Genius Act was recently passed. I think there are a lot of narrative things going on that are bullish for crypto as a whole. And it's a shame that they're happening when they're being massively clouded by a war, by the quantum threat. I would argue, noise or FUD. But there are positive things going on. Gold, I think gold is constrained by the dollar system too. It spiked and then got crushed right? I know you're saying the Hormuz, toll thing is silly, and it is silly, but this market is silly. Trump is silly. It sounds like I know we're saying no, the Strait won't take money in Bitcoin. These guys barely know how to spell BTC. It's nothing. They think it's completely secret and private. Listen, there's a lot of nonsense going on, and it would not surprise me if there is a Bitcoin toll or some sort of crypto toll. Maybe it's not Bitcoin, but it all funds the narrative. But Abror, no one's going to do a better job than you at presenting the bull case. So present the bull case, and while you're at it, Tom brings up the quantum threat a lot. I would like for you to also give your best debunk of the quantum threat, at least for this cycle and the next cycle. Tom essentially says big players are not going to get stuck in because of the quantum threat. I need you to make him happy. I need to spin him. Let's see. Bull case and quantum threat.
Okay, so I'll start with the bull case. I think even the biggest quantum father, this Charles Edward, he was mentioning that BTC at these prices is undervalued, even if you take into account the quantum discount in his model. So the fair value of BTC should be around like 93K or something like that, according to his own model. And he is the one of the most loud people pushing this quantum narrative. Okay, that's the first thing. And the second thing, look, Saylor keeps buying, and for, we know like liquidity and stuff like that, but ultimately the psyop behind Bitcoin is like hodl thing, So people just hodl, and who's going to be selling? Like I can see like some ETFs selling down, like I can see some nation states who accumulated via ETF selling it down. But ultimately, I think most of the selling has been done. Market makers blew up, funds blew up, DeFi protocols blew up. These are things you typically see in bear markets, and having them like behind is already a little bit encouraging. So that's the book here. So all these, I think there is still time, to be honest, because like if we won't be late, I think. If there is a shift in the environment, we'll be very quick to pivot. That's why like I'm calm. Like I'm not like FOMOing, because like a lot of people reached out to me like literally like with FOMO, like, and we talked with Adam about it. So I think there will be time to actually pivot. Like, even if you buy back 10% higher, still like you avoided another potential 20, 30, 40% drawdown, especially in altcoins. Okay, so I think that's a good deal. So like I'm fine with it. Regarding quantum, this is where the fun begins, right? I think first of all, I think it's a good thing that they're pushing this narrative to push everyone to be prepared for it. So it's a good thing. If they're quantum resistant, you can't go wrong with it. Okay, even if it never arrives, the quantum technology never arrives. But right now, the technology is so childish in its current form that like the best use cases for it is like a simple calculator, and it would still underperform the regular calculator we have. Okay, so that's the state of quantum computing. It's like a very basic, very kind of like, how do I say, primitive technology. It's like my niece, who's like 6 years old, could do like probably better math than quantum computers. So that's the state of things, okay, currently. And the potential threat, potential quantum computers, these qubits, 10,000 physical qubits, logical qubits, them coming along and cracking Bitcoin's cryptography is just theoretical. Technically, this thing can happen in like 20 years, or it can happen in 5 years. So we don't know. Just like, we might find aliens in 5 years, or we might find aliens in like 20 years. It's theoretical thing. So that's the thing with quantum. It's a good thing to be prepared, but it's not as like, wow, by 2029, if we are not quantum resistant by 2029, we are going to zero kind of thing. But I understand the narrative overhang though, because this thing is like trending. Some people might believe in it and go like, okay, you know what? Maybe I shouldn't kind of, even if it's not true, we probably shouldn't go risk on this asset because there is this quantum thing. But ultimately, I think it's like very theoretical. And if you really read like what quantum computer is, it's like sci-fi thing, like harnessing the power of parallel universes, because in quantum world, you can be in multiple places at the same time. In our world, you can be like here in London or like, whatever, and nowhere else. But there you can be like in multiple places at the same time. So you can find the solution way faster because like there are like hundreds of you trying to find the right path at the same time. So that's how it works. But it's like sci-fi thing, you know what I mean? So whether they can scale it, we need to see it. But again, ultimately, it's theoretical. It's a good thing that teams should be prepared for it, just in case. But again, it's like, we might discover aliens as well, like, down the road, just like we might have quantum computers.
Can I push back a bit?
Yeah.
So the quantum thing, regardless how realistic the threat is, I think it keeps big money off the table. I think it keeps big money it stops big money coming in. You can invest into gold and know that it's not going to be hacked and you lose 100% of your investment, or you're not going to have 30% of the supply just come online and be dumped on you and send the price of your asset down by 80%, 70%, whatever. So I think just the threat over it, a sovereign can't be seen to go and allocate 400 billion to an asset to then have it go down by 80% because of a quantum threat. With gold, they don't have that problem. There's other problems, obviously, but not that problem. So I think that's like the main part of it. But anyway, the DeFi thing. I think the DeFi thing about the hack.
I'm going to touch on that in a second. That's tricky.
This is so drift aside, etc. You said about bear markets, we see DeFi platforms, etc., get hacked. Blah, blah. Luna went down in May 2022. May 2022. The bear market price bottom was November 2022, and May 2022 was actually a pop for price. So I think just because a DeFi platform starts to go down now does not mean this is done now. It for me, it means there's another 6 months probably of this to go. So I don't think and I think Luna was the big one, and I think everything struggled because of that. I don't think Drift will have that impact on the ecosystem like Luna had back in 2021, 22. So I think it's a feature of a bear market. I don't think it's like, oh, cool, we've had a platform blow up, sweet, we're back to the races. I don't think that's the case. I think it just it's just what happens in bear markets, and I think it's like a prolonged thing where few things like that happen. So there'll probably be more platforms to be hacked, to be honest, in the next 3 to 6 months. And I think once you see a few of them go over, I think that's when it's like, okay, we've had enough of these.
Don't you think 10th of October was similar to when like Luna collapsed?
Yeah, I agree with that, to be fair. I do agree with that. I think I do, but again, I think these bear markets are 12 months. So even if you take that as the 12-month block, what was that, 10th of October? Put you in next October. Don't get me wrong, I don't think we bottom Q4 of next year. October's Q4. Yeah. So I don't think we bottom in October. I think we bottom well before this. Again, just everything I look at beyond me, the bullish arguments aren't that strong. I think the strongest bullish argument you have is that, or we have generally, whatever, is that it's price action's been crap. It's down 50% and sentiment is pretty bad. That's about as bullish as you can be in terms of like, this is a bit too depressed for too long, we should flip and go bullish. I think that's like the best argument you could have. But when you actually look at like the liquidity side, the Fed side, what else is really driving crypto? Yes, we might get this Clarity Act, but like Adam, you said, there's lots of good things going on in the background for crypto. That was always the case in 2022. It did go a bit quiet in 2022. Well, early 2023 was worse because that's when SBF got nicked basically and was in prison, and he was the guy in the White House. Blah blah blah. So I think we've always built well in the bear. To be honest, all the best products, the best bull market products, have always been built in the prior bear. Yeah, I don't know. I don't see that. See the bullish argument.
I hear you. I think my predicament is I lean towards what you're saying. It's my job to push back here.
Yeah.
It's more. You're right. It's a shit show. And there's lots of the macro backdrop argument you make is probably the strongest for why I support your thesis of going 50 to 60. And look, our predicament is we're a research analysis company. And very rarely, if ever, have we taken such a stance on where things are going. We do a lot of hedging, understandably, but you've come in, you've scooped up, taken over, and we've gone out to subscribers and we've said 50 to 60. I know a lot of people who sold everything and are waiting for that 50 to 60 level. I know we haven't proposed that. I know we haven't said do that, but that's what a lot of people have done. And my position is like, you know what? Maybe price pain, as you said for a while, was done. Now it's time pain.
Yeah.
My concern is, okay, everyone who's listening to me and the team is risked off. They're waiting for 60 to 50. And Tom's right. We're bear market. It's not over yet. But we're going to bounce between 70 and 60. And then we're going to switch and start risking on. So you're right. Maybe the bullish catalysts aren't going to push us to like 90K. But I'm just not sure what else is going. I'm not sure I'm being pushed to the 50 to 60. And I'm trying to figure out two things. Where your invalidation will be, where you're like, you know what? We're not going to 60 or 55 or whatever that may be. And or the game plan. Is it, I know you talk about laddered bids. I know we've spoken about value cost averaging. What do we do for members now? You know what I'm saying?
So firstly, we risked off well before 69K, whatever it is. We're at now 71, whatever it is. Risked off well before then. So if we change our mind today, like that's fine. But again, drop everything that you think and you know. Wake up tomorrow morning, start doing all your homework, bullish arguments, bearish arguments, etc. And then you have to look at like the bull cases and the bear cases. And the bear cases are overwhelming. If we hold the range of 60 to 70K, say, or even if we go to 77K, pop back down to 72, and we hold between 66 and 74, and then all of a sudden you start seeing inflation problems start to ease off. Inflation starts to come down, the war's been resolved, the Fed start then coming to the table, you start to see weakness in the labour market, but it's not so weak that the Fed, you've got an economic crisis on the horizon, but there's enough weakness that the Fed can cut into it, and they go, 3.75% is too restrictive now, blah, 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 we need to get down to 2.25, and then you've got 625 basis points cuts on the thing, sweet, we'll flip, and we'll go for it. But again, it's in terms of like what the invalidations are, people go like, oh, well, what price are you going to be invalidated? No price.
Forget price. Something I had something noted down. I was gonna run by you actually on it's not a bull case, but a pushback. It was like the $45 trillion debt wall going into 2030. Will it not force the Fed intervention? The Fed cannot just sit there and watch this debt continue to pump. At some point, surely they're gonna have to pivot, like they did in, I believe it was March 2020, or maybe in 2022.
So they need to get rates down so that they can refinance this debt. This is the bull case, but again, it's not the bull case for today because of the inflation problem, etc. So that they need to refinance this debt, and to do that at a more sustainable cost, they need to get the interest rates down and the yields down. But the problem is, there is this huge term premium in the bond market, which is investors saying, we don't trust you anymore. It all started when they seized the Russian assets because of the Russia-Ukraine war. And then all of a sudden, bond yields have traded with a bit of a premium since then. Because why are you going to buy someone's debt or country's debt, business's debt, whatever, when they could just they could just turn up and say, hang on a minute, we actually don't agree with what you did there. Those bonds you bought off us, and they sit on our SWIFT system, we've just seized them and you don't own that debt anymore. You can't do that. So there's this term premium in the US bond market now, and this is why you're going to see this like more elevated yields. The only thing that I really think will bring yields down, which is then means the Fed can cut rates, is a recession. I think that's the only thing that will send yields down substantially. And I'm not ruling it out. I think something like that is possible right towards the end of this year, early next year, and then the Fed will print into that. But again, bond yields will come down substantially, so it allows the Fed to lower interest rates and print into it, and also then the debt gets refinanced. So that's the backdrop, but that's not a backdrop today. It's a backdrop for 6, 9, whatever, 12 months time. So that's their problem, and Besson's job. Besson knows this. Besson is not silly. He's like super smart man. He knows this. But what can he do? Like, he can't do anything. So every time the bond yields go up, what he's been trying, the 10-year goes up, his job is to try to talk the market back down, talk bond yields back down. Like, Trump comes out, just says something mental, bond yields go up, stocks sell off. And then Besant comes out and then tries to stabilize all that and say, oh no, but he's much more measured. He's, whatever. He's then trying to push, put a floor in on stocks, bring yields back down, because he knows it's his job as head of Treasury to get that debt refinanced, and that's why they're doing it towards the front of the curve in bills rather than bonds. So they're issuing short-term debt. What Yellen should have done is, the prior Treasury Secretary, she should have termed down the US's debt. But what she didn't, she tried to goose it for Biden in 2024 by issuing these bills, which was basically selling debt when the rate was, during COVID. During COVID, she goosed the markets by putting issuing bills, which is short-end debt. When the bills are like 0.5%, what she should have done is she should have sold bonds then, 10-year, 20-year, etc., and termed out the debt when the yield was much lower. But yeah, she didn't.
Okay, perfect. You know what? So last question.
Sorry, that was
So you're not,
long-winded.
no, it's good. It was good. I'm pretty sure YouTube Shorts up to 4 minutes now, so I can't complain anymore.
Yeah.
So just before I go then, so you still see 50K as a potential? Like, you're not going to move your goalpost at all?
Something that starts with a 5.
Okay, fair enough.
I'm
Okay, great.
Honestly, I'm confident. I don't know. I'm confident. We're 60 days into a range. I think price pain, 80-90% of the price pain has been had. The time pain is then still there. I think the time pain is 3 to 12 months. I don't know, if you see 3 months, I'd be gobsmacked if it's 3 months. 2025, you had the tariff taco, but the fiscal impulse was brilliant. We just don't have that now. In short, I still feel like I'm confident. I can be wrong. Sure, I can be wrong, but I don't know. Confident.
Yeah. Makes sense completely. Okay, Tom, we'll leave you alone now. Had to do
Thanks.
it. I was ordered by someone. Someone told me I had to do this.
That's
So,
all right.
yeah. Okay, cool. We touched on it briefly, and I want to dive into it. We're going to move the conversation away from macro now. We'll dive more into just crypto as a whole. Abror, Drift protocol, 285 million, give or take, hacked from this, I guess, lending market. I actually know a couple of people who had funds in. I heard today, I know a couple of people who lost 6 figures from this. So yeah, it wasn't a hack in the traditional sense. There was some human psychology and some reverse engineering here. Could you explain very quickly what went down and how the guy pulled it off?
Yeah, so the hacker met the Drift developers on a crypto conference. So they introduced themselves. They said, hey, like 6 months before the hack. It was crazy. Like when I read it, I was like, the execution, it's just mental how it happened. So they met like 6 months earlier. They met at the conference. They exchanged contacts. They said, hey, we are developing something. We want to build on top of it, because Drift allows other teams to build on top of its liquidity and tech, etc. So they exchanged contacts, and they even showed like prototypes and stuff like that. Hey, this is what we are building. We just need your assistance. So they created a Telegram group essentially together, and there were like communication between them for like 6 months, like back and forth, saying we are developing this, we did this progress, we did that progress. And I think what happened is that one of the team members, they opened a PDF or something when they sent like, hey, can you look at it? And when that happened, they extracted the admin keys. So that admin keys allowed the hacker to kind of manipulate the market. So like when you're creating a market in Drift, you need the admin keys to confirm, to create the market. For example, if I have like asset A and I want to create market for it, like, we try to do it with Camino for like Aura and stuff like that. So with that key, they were able to create a market for an asset that essentially was worthless, but they kind of manipulated the oracle to say that it was worth like something. So essentially, it shouldn't have happened without if they didn't have the admin keys, they wouldn't be able to create that market for this worthless asset. So they were able to create the market and supply the asset. They manipulated the oracle to show that it's very valuable, and they used that asset to borrow like bunch of other assets like GLP, Solana, USDC, and they just extracted all that money and then just run away, because the asset is essentially the collateral. In a traditional, in a proper market, that traditional would have been liquidated to repay the debt, but because the asset was worthless and it was just manipulated to be seen towards something, they can't repay the debt, and the hacker just ran away with like $285 million. So this is what's happened.
Yeah.
Easy.
No, it's crazy. It's crazy. And this is not, it's not the Luna situation, not the SBF situation. I saw a stat that if like FTX were some of the most phenomenal investors if you go back at what they bought.
Anthropic,
yeah, absolutely crazy. So yeah, but in short, crazy way they pulled it off. North Koreans supposedly Abror, is that correct? Yeah. So now I wanted to bring this topic up because I wanted to discuss with Tom, because Tom, you are a big trader and you trade a lot on Hyperliquid, correct? That's your choice of protocol for trading?
Yes, that's right.
Yeah. Okay. Now it's different context, but when me and Abror look at Hyperliquid and we kind of stress test and said, what's the biggest pain point or issue we see? It's basically the number of validators. So Ethereum has a ridiculous number of validators. Anyone can be one. You know, you get like 21 ETH, you can become a validator. There's loads of like liquid staking protocols for that. Solana has tons too, not as many as Ethereum. I believe there's around like 20 validators for Hyperliquid. And Abror said if 4 individuals collude, they can basically do anything. So Abror, I'll let you expand on that, but we're talking about the wild west of DeFi. We've seen so much crazy shit happen. You've just heard of a $300 million hack. That was very clever. Some very, very clever human manipulation, like psychological warfare. Abror, explain Hyperliquid's validator situation. And then Tom, like when you hear this, does it not give you some kind of room for concern here of just holding your funds on this trading account? Go ahead, Abror.
Yeah, so there are 18 validators on Hyperliquid, and
how many on Ethereum?
Like over 100,000, I think.
Okay, how many on Solana?
Around like 700, 600, around that.
So 18. Keep going.
Yeah, so it's like 18, and it takes only 4 validators to collude to hack the bridge and kind of steal USDC from Hyperliquid. Okay, because Hyperliquid, they have mostly whenever you trade against other people. So there is big pile of cash and they all trade against each other. So like majority of like total value locked is just USDC. So for people, if they collude, you know, it's possible to kind of steal the money from Hyperliquid. And for comparison, when Bybit hack happened, it was also the same thing. Like, 4 people, they kind of extracted the keys for these 4 people, and then they hacked the Bybit. And Bybit is a centralized exchange. It's not like a DeFi protocol. But the security is the same for like, I know they have like some safeguards for Hyperliquid, like, even if 4 validators collude, there is like 1 validator that always monitors and can stop them. So there is kind of like a time lock.
So 5 people then need to be compromised.
Yeah, kind of like that. Yeah, but still, time lock might not actually be triggered. You know what I mean?
Yeah, for sure. So we actually go ahead, bro. Sorry, keep going.
Yeah, so the security is the biggest concern when it comes to Hyperliquid that I have. I've been always aware of it, like for the last 2 years, but it didn't stop me from being bullish on hype. But yeah, we need to understand the risk, like where things could go wrong.
Yeah, absolutely. And I guess Tom, we were talking about this before the stream. You trade in Hyperliquid, but you leave your funds in there, correct? Like I know you trade quite frequently, but your funds are always in there.
Yeah, I have some. Don't get me wrong. I don't have all my funds in any one spot, but I do have like a chunk of money there. Again, the protocol security is not my strong point. I like trading. I like the macro side, on chain side, etc. So I would just like like defer back to you two and be like, am I safe? Am I not safe? Would you take the risk in my position? Obviously, like I have a vault and a fund and stuff, so that's like what like what I'm doing and stuff. Is it worth the risk or is it not worth the risk? You guys tell me. If not, I'll pull off.
Well, I will give you
It's
my
simple. It's
opinion.
as simple as that. No.
Yeah, no, I'll give you my opinion. I think Abror's a lot more knowledgeable here. We said, what would we do to avoid what happened with Drift? Well, I think the first thing is to trade across multiple places and multiple chains. So, trade on Hyperliquid for sure, but maybe trade on Binance too. Maybe use a
Yeah,
different exchange as well. So you're hedging across exchange and chain.
yeah.
Because yeah, look, if you have
That's what I have. I have Binance Hype and OKX basically.
Yeah, so I think ultimately it just comes down to that. It's hedging across a few different places. Same thing whether you're staking, whether you're providing liquidity, whether you're trading. Big lesson there. I think we need to cover this in its own piece. That said, I have a thought, and I'll swing it to Abror. Abror, so this seems just good for Ethereum. Ethereum's whole thing is we're the most secure chain. This is our benefit. Yeah, a little more expensive, a little slower, but it takes a lot more for us to have issues like this. I don't remember the last time Ethereum faced an issue like Drift just went through on Sol. Does this change your view on who will lead this cycle? Obviously, Hyperliquid's an L1 too, but it's its own beast. It's a bit different. But has this changed your view on whether it's ETH or Sol to perform over the next, let's say, year or two?
Yeah, I think if we were to see a new bull run, I think ETH has like better chances to lead compared to BTC and Solana. That's my like preliminary thoughts for the upcoming, bull market. Because one thing, like Solana is being like, absolutely smashed with these hacks, meme coins, extraction, pump fun and stuff like that. So the how do I say, the brand damage has been done to the DeFi for Solana, they got hacked. Um, the ecosystem is still good, but ultimately Ethereum has scaled as well because the value proposition of Solana was that, oh, it's much more scalable. But then Ethereum pivoted into scaling its own L1 rather than focusing on L2s. So I think that puts in a very strong position. And the second thing, again, this quantum thing, that the quantum narrative, I would say narrative overhang. So it might not be true, but that can suppress BTC for a bit simply because it's a narrative. So that leaves room for Ethereum to shine because they are much more eager to kind of fork themselves compared to like BTC community. They are so hard to like, convince into something. Even Michael Saylor goes ahead and says, hey, one of the biggest threats to BTC is like young people trying to change BTC, kind of thing. But so Ethereum could go ahead and say, hey, you know what? We've been forking for the last 10 years since our inception. We've done multiple forks. We are a type of community that evolves over time. We want to evolve and be quantum resistant. And they already have like established like quantum research, foundations and stuff like that. So that gives a hand to Ethereum compared to like Solana and Bitcoin. So that's why I think could happen. And the funds, they would be like, okay, I don't want to buy BTC, but the bull market is starting. What I'm gonna do? Like big money.
Yeah.
We have like this narrative overhang for BTC, but I want to get exposure to crypto. What I'm gonna buy? I'm gonna buy second biggest asset, Ethereum, without worrying about this quantum thing. So that's how I see it could play out. So yeah.
That makes sense. I guess that makes a lot of sense from an investor's point of view. Tom, I have a question for you. Notoriously known for smashing it with your Bitcoin trading, but also struggling with hype. How have
Yeah.
you found trading ETH and Sol? Do you have a preference? Are you better at trading one or the other? If so, why?
I'm okay at both. I'm best at Bitcoin. I'm okay at both of those, and I don't trade hype. I just don't do well at it. I leave it. I appreciate that others are good at some stuff. I'm better at other stuff, worse at some stuff. This I'm 100% worse at, so I don't try to trade the asset hype. I leave it. Even if I think there's a good setup now, I just think like I was looking at it the other day and thinking like maybe this would be a good short to get to this area, and I was like writing it down and then just thought like you're an idiot. Don't bother with that. Just focus on your own stuff. And then I just longed oil.
Fair enough.
Just go a different direction with it.
Oh wow, fair enough, fair enough. Abror, what about yourself? Are you particularly better at trading in Ether or
I'm very
Sol?
good at trading at high. Like
Okay, hi.
I could time the bottom, I could time the not absolute top, but still I could like sell at decent prices, buy back, run all the way to like $40 and then sell about $40. So I am relatively decent at trading high because I understand the asset and what drives its value accrue.
Yeah,
So I can see like, okay, this is where like I even have a post still on my X where I said like when it was like $21, I said the generational bottom for hype is closed, blah blah blah, and it just run from that point. And I'm also good at shorting, I think, like certain assets.
yeah. Are you still shorting AVAX?
No, I closed it on profit, but I'm still looking to short it. But I'm looking at BTC again. It's actually up. So I made money. Like it was so volatile. So I was like shorting, closing, and it was going up, and then again shorting, and it was so I made profit like 2, 3 times. But now I'm just waiting until like BTC starts showing a weakness. But I'm gonna short it like, and I will short other assets as well. Like it's not like I have like something personal with
Zec?
AVAX. So I know I wouldn't touch that to be honest because I
No,
don't want to be.
so sorry, not yet, but if BTC gets to like 75, 79, anywhere in that sort of area, and it starts to look weak or something, should it get there on this like war thing, whatever,
Nah,
you wouldn't short Zec?
like nah. And the reason why I don't like shorting something that has strength and momentum and narrative, and it just like, why would I short something that could potentially go down instead of like shorting something that very likely to go down because there is like no narrative. And the thing is, the best part about shorting that I've noticed, you could argue like, oh, it went up like 20, 30, 50, 60%. That should be a better short. But that's not true though. Because if you
Momentum.
short $1 billion asset, it still can go down 50%,
Yeah.
just like 50, like, how do I say, like, if you're trying to long and the asset doubled, the next double will be harder in general,
Yeah.
right? But if you're shorting, if the asset is down 50%, it can go down another 50%, and still trade at like, at reasonable valuation. So I think that's the cool thing about shorting.
Okay.
So yeah, so I wouldn't try to short like Zcash because, I would rather short like assets that, even like God forgot about them, There is a
Okay.
saying, God forgot about kind of thing.
Yeah, awesome. Okay, guys, look, thank you very much. There were other subjects I thought we could cover, but this one's gone on quite long. I think this was a great stream. Appreciate both of you guys. Thanks to everyone who watched too. We'll put the recording up afterwards, and yeah, we'll talk more in the Discord later. But thank you guys, appreciate it. Rain, you can sign us off.